Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. Today's Friday, August 16th, 2024. Look at this. It's a little bit cloudy today, very different than the blue and sunny skies that we saw over the last couple of days. So let's see what that says about the market. Here are the things that you need to know. Yes, retail sales exploded higher yesterday, surprising really everybody on the street. Walmart not only blows the roof off the house, but blows the house off the foundation. And we'll get to that in a moment. Stocks rallied. Bonds fell, oil is up, gold is down. Housing and building permits are the focus of today. And what do we have for dinner tonight? We're having the Pork Cutlet Milanese with Tomato Bruschetta. It is delicious. All right, so Jackie Wilson, 1967. This is all you need to know about what investors thought about the U.S. markets as of yesterday, right? Your love keeps lifting me higher and higher and higher. And with that love, stocks surged while bonds stumbled. Retail sales, which was the big number to watch yesterday, blew the estimates out of the water. Consumers flocking to Walmart. We're going to talk about that in a second. Top line retail sales came in at a full 1% versus the expected estimate of up 0.4%. X and autos came in at plus 0.4%, better than the plus 0.2% that was expected. In addition, initial jobless claims fell by 8,000 to 227,000, while continuing claims registered at 1.864 million, down 6,000 claims. So traders and algos loved the news while conveniently ignoring the weakness in the Philly Fed business index, which was -7 versus last month's +5, and the industrial production of -0.6 versus last month's positive 0.6. They ignore it because it didn't fit the narrative that they want, so they just push it aside. Walmart reported not only did they blow the roof off the house, but they blew the walls and windows right off the foundation, right? As some analysts said, look, they just checked every box. A stock rose by 8.4% in the early trading to end the day up 6.6% or at 73.18 a share, leaving a 6-point gap between the close on Wednesday at 68.66 and the opening on Thursday at 74.12. The beat on earnings, they raised forecasts, but the headlines say it all. Walmart lifts full year outlook on the bargain hunting shoppers. Walmart grows more optimistic about 2024 as bargains prove a powerful lure for the inflation weary. Remember, Walmart operates discount stores and supercenters, right? They offer the complete range of merchandise, food, apparel, appliances, electronics, musical instruments, home improvement, jewelry, pharmaceuticals, automotive tools, and the list goes on and on. And they offer all of this at discount prices. What does that tell you about the state of the consumer? They're exhausted, right? They are exhausted. So they're scaling down and going to Walmart. Now, don't get me wrong. Walmart is a behemoth. It's a great company and a great store. They run a great business. It's a core holding in so many portfolios. Besides the Walton family, that's the biggest shareholder at 3.6 billion shares. They count Vanguard, BlackRock, and State Street as the three top asset managers in terms of holdings. But the list is very long below that. It's just one of those names that everybody owns in their portfolio, and it's not sexy by any measure at all. But it is a consistent player, and it falls into that defensive sector that we've been talking about for weeks. And I bet you didn't even know that this boring defensive sector stock is up a whopping 40% year to date. Not so bad for a boring stock, right? On the back of all this, swaps traders are now reducing their bets on how aggressive the Fed needs to be in cutting rates. Remember, last week they were calling for jumbo cuts, think 75 basis points or 1 full percentage at the September meeting, while some were screaming for an emergency meeting in between, not wanting to wait until September. And as of yesterday, the bets are now coalescing around the 25 basis point cut, something that you and I have been talking about all along, and something that the Fed has also made very clear. Bond prices fell and yields rose as the nervousness and the angst in the markets begins to fade. The TLT fell by 0.8, the TLH fell by 0.9%. The 2 years now yielding 4.05%, and the 10 years yielding 3.88%. Oil rose by 1.4% to end the day at 78.09 on guess what? Renewed enthusiasm around the U.S. economy. Can you believe it? Suddenly, the whole China story isn't relevant at all. Again, because it doesn't fit the narrative, right? The narrative yesterday was all about focusing on the good news and pushing the negative news to the back burner. And that is what they did to oil yesterday. Yesterday's retail sales report suggests that the U.S. economy is just fine. And if that's the case, then energy demand is not going away. But remember, energy is not a want, right? It's a need. We need energy to power the world, and that's not about to change. What will change is the supply-demand story, and that is what will drive prices. Now, this morning, oil is down $1.40 on these recurring weekend fears that something is going to happen in the Mideast, right? That something is going to happen over the weekend. Iran's been threatening for 2 weeks now, and this weekend is always a risk that something happens when most of the markets are closed. So you see some trader types this morning are taking the risk off the table, and that puts pressure on prices because the buyers see the anxiety in the sellers, and so they just bid lower, taunting the sellers to hit their lower bids. And by the way, that's the way it works in any asset. Anxious sellers always create panic to the downside, while anxious buyers create excitement to the upside. Just look at what happened yesterday in the stock market compared to what happened to the stock market a week ago on Monday, August 5th, right? Excitement versus panic. It's really amazing when you think about it. Now, gold continues to churn around the $2,500 level, and this morning it's up $11 at $2,503. Yesterday, we saw gold trade as high as $2,510 and as low as $2,470 on the excitement and interpretation surrounding that retail sales report. Eco data today is all about housing starts and building permits, which, by the way, are supposed to be down 1.5% and down 2% respectively. And if so, I suspect we're going to see that begin to turn around next month as lower rates will probably spur some new housing demand. U.S. futures, well, they were taking a break, and actually the market's open now, and we see the market mixed, right? We went from kind of flat to negative, and now they're just kind of churning around the unchanged line, right? The rally that we've seen this week is great. As my good friend Tom Hayes of Great Hill Capital tells us, told Stuart Varney yesterday, when the music plays, you gotta get up and dance. And I love that quote because he's exactly correct. And that's what we've seen this past week. Investors, traders, and algos got up and danced versus what they did on a week ago. Anyway, European markets were up today. Only the UK is under some pressure. UK retail sales did rise by 0.5% versus last month's negative 0.9%. But the uptick was not broad-based, and so the Brits are figuring it all out, while the rest of Europe is also celebrating the latest US data. The Italians are really dancing. Their market is up 2.2%. The S&P closed at 55.43 last night, up 88 points. And here, I thought the trend line was going to provide some resistance down at 54.55. And once it challenged that level, it failed to provide any resistance at all. And that is because the buyers were so excited that the sellers thought, why stand in the way? Let them come and get them. And they withdrew their inline offers and they moved them higher, and buyers were just scrambling. Note the mood yesterday was excitement, not panic. Because when prices are going up, it's all good, right? We're now in a position to challenge the yearly high, right up at 56.50, while we're still in the seasonally weak time of year. And like many, I still expect the markets to trade lower and to test those Monday lows at some point between now and the end of October. In the end, though, it's the same story. Be confident in your portfolio. Take advantage where it makes sense while building defensive positions. Don't keep a large portion in cash unless you're so nervous that you think, the markets are going to collapse. Make sure you know what you own, and at times like this, talk to your advisor if you're concerned. And you can always give me a call because I'm happy to talk. Okay, so this is what we're having for dinner tonight. This is such a great dish, and you can make this. You can make it with pork, you can make it with chicken, or you can make it with veal. Anyway, today we're making it with pork. It's the Pork Cutlet Milanese, served capriciosa style, right? I love this dish. You got to start by making a Tomato Bruschetta, right? You're going to get some nice ripe plum tomatoes, maybe 7 or 8, depends on how many pork cutlets you're making. You're going to dice them. You're going to put them in a glass bowl. You're going to add 3 or 4 or 5 cloves of chopped garlic. You're going to add that to it. You're going to add fresh basil. You're going to chop that, season it with salt and pepper. You're going to add olive oil and diced red onion. I love red onions, for me, the more the merrier, but you have to figure out how much you like. You want to then mix it, then cover it, let it marinate. Do not refrigerate it, right? If you're going to use it today and you're going to use it tonight for dinner. Next to pork cutlets, pound them thin and then rinse them and pat them dry with a paper towel. Beat a couple of eggs and set aside. Prepare a bowl with Italian seasoned homemade breadcrumbs, set that aside. Prepare a bowl with some flour, set that aside. Now you're going to make the assembly line, right? The flour, the egg wash, and then the breadcrumbs. Pour some of the olive oil in a broiling pan, turn on your broiler on high. You want enough that you're going to cover the bottom of the pan, but not enough that you're soaking the cutlets, right? You don't want them to be bathing in the oil. Place that pan under the rack, and the second rack, not the first one, the second one, and allow the oil to get nice and hot. Now, dredge the cutlets in the flour, dip them in the egg wash, then dredge them in the homemade breadcrumbs, making sure to coat them well. When the oil is nice and hot, then you're going to take this cutlet, put it in the broiler pan, put it down, and then turn it over so the seared breadcrumbs are now under the broiler. Cook fat for about 5 minutes or until it's nice and golden brown, and then go back in there and then flip it back over to cook the other side just as well, right? Maybe another 4 or 5 minutes, again, depending on how many you got in there and how thick they are and all that. Now for the presentation, you need to make a bed of greens on a plate, maybe fresh spinach, arugula, maybe some Boston bib. You can mix it up, use just one, whatever you like. Next, place the broiled cutlet on top of the greens, right in the middle. And then using a spoon, you're gonna go back to your bruschetta and you're gonna put the bruschetta all over the cutlets, right? It's a colorful dish. You got green from the greens below, you got the red from the tomatoes. It's like eye candy and it is delicious. You're gonna serve this with a red wine of your choosing. For this, I just like the typical Chianti Classico, but you could choose anything you like, anything that's gonna make you happy in any event. It's Friday, the weekend's coming, the skies are a little bit cloudy, the market's kind of churning, trying to figure out what to do. Until Monday, take good care.